API meets AI. Will intelligent platforms make traditional banks obsolete? Welcome to Breaking Down Barriers, where we hear from the real builders and makers within the MENA region. Today, our guest is Ashu Gupta, co-founder and CTO of Lean, angel investor and blogger. Do you want to just give a quick intro to the audience of who Lean are?
Of course, and thanks for inviting me here, Ricci. So Lean Technologies is, you can call it as an open banking enabler platform. But when we started Lean, we started with the mission of enabling financial innovation for both data and payment in the MENA region. At first, we started with providing API access to legacy banking infrastructure, which enabled our clients, which are mainly businesses, to access their user data from their financial accounts. And then that provided the convenience to all business apps to work on seamless payment systems and building investment strategies or budgeting apps and things like that. Now, as we know, open banking is live, almost live in UAE, and there are open banking in KSA. So with the advent of these new technologies, we are slowly evolving into a premier pay-by-bank A2A payment company, along with some value-added services with respect to intelligent business decisioning platform. So Lean in a nutshell is an infrastructure layer which will enable a lot of innovation or innovative technologies for our clients.
Okay, great. And if we get straight into it, so API meets AI and will intelligent platforms make traditional banks obsolete? What do you mean by that?
It's controversial now. We have heard a lot, this is dead, that is dead, it happens. So we have seen how APIs can transform financial industry in Europe, right? And in UK specifically, open banking after its launch, yes, it has seen its ups and downs, but I think the advantages are pretty clear. So it has been a disruptive technology, right? AI, on top of that, I believe is adding as a catalyst to that disruption. Now, with open banking, we get direct access to financial systems, right? We are able to fetch data, which were kept in bank vaults, not available to anyone. We are able to provide seamless payment services. All those things, we have seen a lot of examples of that. But with AI now, you can bring a lot of hidden insights from this user data. You can build more and better, probably, investment strategies, budgeting systems. So there is a lot which is happening. Now, this new ecosystem is disrupting the power balance between the traditional banking systems and the new fintechs. Banks are losing their role as the gatekeeper of the data, which is quite big for them. Fintechs are getting access to this data, to this system, these channels, and thereby challenging the existing Mastercard, Visa kind of schemes, is challenging the status quo. So API and AI, both to me, is a deadly combination going forward. We will see a lot of innovation coming in. When these two things are combined, banks, existing incumbents, all will have to slowly adapt and adopt these two things in their businesses.
And when it comes to obviously 2020 to 2025, what do you think those main components might be for that kind of, obviously last 18 months, 2 years, all have been about the adoption of AI and people getting their head around it. So what do you reckon for 2025 as we go into like the execution of some of these things?
That's a very good question. So I've been experimenting with AI and generative systems for last year or so. But I believe because this area is so fast changing, this year, 2025, will be more about custom models. It would be more about agentic systems and agents replacing services that I foresee happening. Like, for example, at Lean itself, we are investing some of our capacity in building AI agents, which will help us in document processing or building better insights or connecting the dots in this distributed data set which we receive and helping our customers to make faster decisions. So I foresee that world will become more agentic, more AI driven in this year.
The rise of the AI agents this year has been a lot of the talk, right? Which is interesting. But from what I understand, though, it has to be in complementary still with the consumer and the customer as well, rather than completely replacing everything altogether.
Yeah, I think saying that it will completely replace would not be right. Nothing changes overnight. But the pace is incredible. The pace of change is incredible. We have not seen this kind of change. Every fortnight, there is a new model. There is more customization. There is a new framework to work with the models. So overnight, it will not happen, but change will happen. And the change, I believe, would be massive.
What do you think happens to the consumers in banking of a different generation? A newer generation is used to digital banking. Some are now obviously born in that generation. So what about the ones that, if I think about my elderly grandparents that used to just go to the bank to more of a social hobby, go and have a coffee in the bank. What do you think happens with the rise of all the technology and AI and open banking for those types of consumers?
So I think this is also all, I'm just projecting. Let me start with the younger one, because catching up to the older generation is a little difficult. Younger ones are definitely do not want to visit any branch. They're on their mobile all the time. For example, my son is 16 years old and he already has a card. He already has a bank account. He's managing his stuff. He's even trading using my account.
I was going to say that the young 10-year-olds investing, right?
It's quite different, right? For example, when I got my first bank account, I was 24 years old, right? I was out of the college job and whatnot, and he's 16. So the shift I can already see. Now to my parents or my grandparents, which are the last two generations, they have also stopped visiting bank branches. They're more relying on calling, Skype or WhatsApp banking. So the channels have changed. My grandparents, though, and when he was alive, my grandfather, he was more of a banking person. He will go to the branch, like you were saying, to meet people, to the meet banker and all those kind of things. But I think that is going away slowly. It's becoming more customer-centric. So the bank will come to you. For example, in my hometown, you'd never need to visit a branch. You just call them and the banker will come to your home to deliver the services. For example, the checkbooks or statements, or to talk to you about new services they might have launched. So for that generation, the bank is coming to your door. For the younger and newer generation, the bank is going to your mobile or your digital devices. And if you look at the last statistics which was published, I think in UAE itself, there was a closure of 10 banking branches. Out of 494, now there are 483, if I remember the data correctly. In US, the shift is more dramatic. Almost 10% of the banking branches are closed now. Call it cost efficiency, call it the new generation of digital technologies, whatnot. And maybe it is also demand. People don't want to go to banks and spend some time.
Well, I mean, when I moved here earlier last year now, but I couldn't believe I was still writing checks for rent. I don't think I've written a check since I was 10 years old.
I mean, in the US also, it was the same thing. When I was there for 11 years, I was shocked coming from India at the time where, we had chip-based card. US was still writing checks, but that is changing very fast.
So as more and more people obviously come comfortable with digital banking as a whole, end to end, do you genuinely believe banks will become obsolete, or are they going to have to adapt? But what advice would you have around there, or your input?
I don't think banks will be obsolete ever, banking is one of the main components of any financial ecosystem. Banks will not be obsolete. We need them, and they should be there. They are regulatory bodies. But yes, they will have to adapt. And they are adapting. You look at our own examples, right? We have lots of examples in UK and other parts of the world, but in our region itself, look at the new banks, Zand or Bio, the kind of changes they have brought in. So they're adapting, they're learning, they're learning fast, and they're part of the disruption itself, I would say.
And what fintech success stories disrupting the market would you highlight right now? And what are the established banks already doing? And you just mentioned
like on the banking side, I think Zand and Wayo are the great examples for me. Even Mashreq, they are doing really good with all the digital transformation they have done. They've changed the apps. Outside the world, I think in UK we have Revolut, biggest example. They are now coming to our region also. Then you have Chime from US, one of the best examples I can think of, who have adopted this new technology, and they're becoming the new bank. There are plenty of examples. In our region itself, if to name a few, and again, I'm not being biased, it's just that I serve these companies and I use them as a user. So I've seen a lot of changes. Kareem Pay, big example, huge. Estratech, Bottom Pay, huge examples. They have adopted this new technology. They are providing these systems. They are, I think, pioneering pay-by-bank systems and giving, I'd say, massive shocks to Visa and Mastercard. It's happening.
It's interesting with the ones that are like, I suppose, the incubated startups within a bigger business, Kareem Pay. Do you think from a consumer perspective, there's obviously they've got the monopoly to a certain extent because they've got the consumers there, but then there's also that trust element, right? Of like, well, that's not what you do, Kareem. You're this, and now we're sort of starting to think of you as like fintech and payments. Do you think that's like harder for a business like that to be able to then actually, I suppose, go into the market and have those consumers moving over to using their business from a fintech side?
I think challenge is always there when you are adding competition to an established player. But we also know that every company who is providing any kind of services will have to deal with payments, will have to deal with data in some or the other sense. And I believe that today, at least, there infrastructure players like us making it happen. It's so easy today. Like integrating lean in any of the apps is a couple of lines of code. That's it, right? And then you can write the business logic to do whatever you want. So if in past it was very difficult to challenge an established organization like Kareem or any other player, today it is, I think, quite easy. It's not that you don't have to deal with regulators and compliance and all those things, but at least on the infrastructure side, that challenge is gone. And people expect certain level of functionality already. So for example, today, if you're launching a company which is providing, say, virtual infrastructure, you will have to be careful, right? And you will have to compete with Amazon or Alibaba kind of thing. You cannot just go into the market and say, I'll not provide basic functionality. But given, again, the advancement of technology, it is quite easy today.
I mean, I think from the consumer side, I remember a few years ago, I sold my car, decent money. Usually that whole process end-to-end can take a bit of time, is a bit fragmented, and there's that trust element, like, is that person going to transfer me the money and so forth? And I actually did it through a business like a car platform, Kazoo, which does it all online. They come and pick your car up. So my whole experience was they picked up my car, they took it away, and I got my payments within like 10 seconds. And I think it was with TrueLayer, and it was like through the bank, and it was a seamless, few clicks. And I was like, this is incredible. This technology in the middle is just amazing.
Right. So see, we also saw a lot of increased traction after we integrated with Etisalat, after we integrated with Kareem, because yes, they have the brand, right? So when people see our technology integrated with such brands, there is a different trust vector you automatically get. And now you're right, like we are today integrated with these companies, even remittances, a big thing. Think about the time where it was T+1, T+2 settlement in the destination account. Today it happens within 30 minutes, anywhere in the world, right? It's just because now you have removed the intermediaries from the equation, which was causing adding the latencies or increasing the cost. All is gone, right? So, and combined with that, the trust and the brand value built by bigger players, it helps. So consumers are benefiting. For example, there was, when I landed in Dubai 3 years ago from UK, there was no remittance player who was providing intraday rates. But fast forward today, there are at least 3 players who are providing Google rates. Why? Because one of the reasons, costs have come down, right? So consumers are benefiting from that. For example, now even Kareem Pay is in remittances space, and they're doing the similar thing. Botting Pay is doing the similar things, right? You can pay bills on Etisalat and Do and all these companies through using your bank account, right? Which is amazing.
And is there a particular area, just from your own perspective, that you're like, this area has not been disrupted yet and it's huge?
Oh yeah, definitely there is. So see, one of the things which I still believe need disruption is the reward space. Now think about it today. When we pay with credit card, we get some points, right? Most of the time people use these points to buy something else or airline, some other places. But in open banking side of things, this space is untouched, fairly untouched, right? Just to be fair, fairly untouched. People want to see that if I'm paying it directly from my account, the money is going immediately and the merchant is getting the benefit, I should get something in return. It's fair. So that is one area which needs some, I think, innovation, right? Another one I would think is about fraud detection, which is another big area. We have, if not thousands, hundreds of companies working on the card network and providing transaction monitoring, fraud detection systems. But when it comes to pay by bank or A2A kind of payments, that area is, again, you will not find many companies. So ready for disruption.
And because, I mean, you talk about fraud's gone through the roof with the acceleration of AI. Obviously, it's always been there, but now it's like even more scary, isn't it? Especially with these like AI voice models and whatever it might be. That element of trust is really fragmented, I would say, in the last 12 months. You have to be very cautious.
True. I think AI has introduced so many different attack vectors which were not presented, or which were kind of very hard and impossible for a normal person to use. Today, AI just made it quite possible. So your threat surface is quite large, and that poses a real threat for existing CISOs, CTOs, and all the tech guys who are handling these threats on daily basis. It is quite difficult at this point. But again, I'm very hopeful that once you see a vector, solutions also emerge from somewhere. So somebody should be working on it or would be working on providing some solutions. But yes, you're right. It is quite scary at this point of time.
Yeah. So maybe something else controversial. A to A payments versus card networks. Are we witnessing the death of Visa and Mastercard? And for those who don't know, like, what are A to A payments as well?
Yeah, I mean, it's one of my favorite topics. I remember talking about death of Visa, Mastercard in one of my discussions, and I got a lot of commentary.
I can imagine.
It's a big topic. But again, not to make it too controversial. A2A payments, what it means is that today you move money from your bank account to merchant bank account directly without any intermediaries like Visa or Mastercard, right? When you use a card, even a debit card, money doesn't directly move from your bank account to the merchant account, right? Or if it is P2P, which is person to person payment from me to my friend, whoever I am paying to. So A2 payment is just as account-to-account payments. Money moves with the intra-bank transfer sort of thing. Now, is it a death to Visa and Mastercard? I would not say it is. I'll not go to that extreme, but definitely it has eroded business for them. And you can see it by looking at how they are adapting to it. But it is definitely, the prices have come down dramatically. Earlier, it used to be 2.5% or 1.5%, depending on what business has negotiated. And these have come down to certain basis point. It's very low. Secondly, it has also increased the trust factor because A2A payments are much more transparent, much more faster, and frauds are pretty much non-existent. So Visa, MasterCard, they cannot provide these services or these kind of functionalities in these schemes today, as everyone know. So for them, it's being quite a bit of challenge. Now, whether the schemes will go away completely, I don't think so. They still have the utility in certain spaces. For example, pre-loaded cards or the foreign FX kind of transactions. People will still use them. But when it comes to local transfers or when it comes to low latency transfer, cost-effective transfers, they are definitely dealing with a threat.
So price, trust, fraud, and local transfers, you'd say, are probably the key, I suppose, threats for those businesses.
Correct. And if you look at it, they're not sitting quiet. Yeah. They know about it, right? They're experts.
That was my next question. How do you think they're going to respond?
Yeah. I mean, it is very obvious, right, that they're big businesses. They've been in the industry, and they're basically the backbone of a lot of payment systems, right? If you look at it, they are adapting quite well. So number one, cost side, right? They've already reduced their pricing, and they're competing with most of the open banking A2A players, right? They've introduced AFT kind of schemes, which are, T+0 settlement, low cost, debit card based schemes.
So just on that, if they've just reduced their pricing, they've made it happen.
Yeah.
Do you think they've just been capitalizing, obviously, for a long period of time before this disruptors and technology and innovation?
It's always the case, when you bring in some innovative solution, you want to milk it as much as possible. But the time is slowly going away. Right. And have you seen that they started acquiring both Visa and MasterCard open banking companies, right? And I would not name the companies, but because it's public domain, anyone can check. Both of the companies, Visa and MasterCard, they have acquired some names who are operators in open banking. Just last year, I think MasterCard launched a product, Connect Plus, which was, to me, or the exact copy of Link SDK, which is lean product.
Yeah.
But again, those are the products which are already available with any open banking player.
Yeah.
So that shows us that their trajectory, where they're moving, right? So they have a business to run, which they will continue to run, but they will adapt, and they are adapting quite quickly.
And what are the implications from everything from merchant costs to consumer protections and chargebacks as well?
Yeah. So I think both consumers and merchants are reaping the benefits of this new technology, competition, whatever we want to call it. From merchant point of view, if you look at it, there are at least two things. One is cost, right? They can negotiate much better because functionality-wise, it's almost same, right? Guaranteed settlement and low latency, whatnot. And secondly, their settlement times and reconciliation times are too small now, right? Earlier, there were days where merchants were getting T+2 settlement. Doesn't make sense. The money is not in your account. Then it reduced to T+1, and now in some of the cases, same day settlement. But they cannot still compete with instant transfers, which we have on open banking, which is immediate. Within 3 minutes, money is in your account. Do whatever you want with the money, right? So that is one. And then cost is another one. Another key factor, I think, which is useful for both merchants and consumers is fraud. with credit cards, everyone know there are at least, I will not quote exact numbers, but based on the data I have, 7 to 8% of transactions are fraudulent transactions. And this is a huge number depending on the volume a merchant is transacting. Similarly, so many times there is an end user who is also paying the price of this fraud, and that is reduced with bank transfers completely. You know where you are sending the money. The IBAN is validated. The user is validated. All these functionalities are natively present in the APIs which we have. And that reduces fraud dramatically. There would not be any credit on the payment which is being done, right? It'll just go. If you have the balance, it'll go. So once you have checked the destination account, you have checked the people you are transferring or the merchant you are transferring, and you have the balance, the money would go, right? So it reduces fraud dramatically. I would not say zero, because perfect is very, very difficult to achieve. But I think for both merchants and consumer, it's a big thing.
I just want to finish this off with, like, when it comes to open banking, what do you think is like the biggest challenge for you as a business in the Middle East when it comes to maybe the resistance or the adoption? And do you think it's the same challenges that open banking would get in Europe and the US? The reason why I ask that is because obviously it's just a little bit faster paced there in those particular markets to a certain extent, but then in the Middle East there's so much for disruption and innovation. So I just wanted to see what you think.
I think every region has faced their own set of challenges. For example, when I was in US in 2010, 2011, that was the time Plaid was coming up, right? And I have seen how banks responded to this new disruptor. But fast forward again 10 years, 12 years, see where they are and how banks are now collaborating. US recently passed Rule 1033. They are using FedNow, which is similar to open banking. They were mostly market driven, but now everything is converging on this side. Take example in UK, PSD2 and open banking was not received so well initial years, but advancements have been made. People are buying it, accepting it. All those things happen. And the bank side story is also same. They were not, immediately agreeing to this new way of working, which was difficult. Change is difficult all the time. And I see the same thing in MENA region also. The only difference is, which again, from my point of view and what I have seen and experienced, that regulators and governments, they are much more innovative and aligned with this change. They want to do it. And they are working with both fintechs like us and banks to ensure that all blockers are removed, the regulatory pieces are in place, all whatever they can do from their side, they are enabling that, which is very different than any of the regions I have seen and I have worked with. And that gives me a lot of confidence that adoption here and implementation here would be much faster and probably will make much better advancement in these areas. Because once the regulators and governments are backing up such innovation, things gets a little bit easier. It's if not completely easy, but a little bit easier. So that is what I feel going to happen. Banks will align no matter what. It is what is the need of current times. And they also know that once the support is there from everywhere, they'll have to adapt and learn.
Yeah. I just want to move over to some personal things. So I'm keen to understand what made you transition from the US to the Middle East. And the reason why I also asked, one, to get a bit of that understanding, but two, because you're seeing more and more entrepreneurs come to the region now as well. So good to hear it from your perspective.
Yeah, that's a very interesting question. I think everyone has a different reason for uprooting themselves from a place they are settled in. For me, it was more about an opportunity to make a generation-lasting impact. What we are building today with Lean will have such a tremendous impact in future. I would say it already has a lot of impact, but it still need to be realized, which will happen. And this opportunity is rare. Building this kind of technology, being a part of such a movement is rare. And that was my biggest driving force. Purpose that this is what I'm going to do. This will be hopefully my legacy. And we will have built something we can look towards, right? And then the whole region would have very positive impact of this infrastructure which we are building.
And how does it differ building tech hubs here in the Middle East versus the US, obviously?
Oh, I think, okay, hopefully I'll not be slammed on the spot, but I have my own views. It's quite hard. This is what I've seen. It's quite hard to build tech hub here. And I think there are few reasons for that. One is obviously lack of right pool of talent. We're always bringing in more people from UK, from other European regions, some from even US, mostly from India, Pakistan, and all these places where we have higher talent, I think, concentration.
And do you see high impact from that as well?
I do. The impact is high. Slowly, that population is increasing. But when we started in 2019, this was not the case. So building the talent hub here, it took us 2 years to move most of our engineering to Dubai or to UAE. And now we are hiring a lot in Riyadh too, in KSA, which is our headquarter. But it was very different in US. A lot of availability. I think second reason is also about, which is I think to me one of the biggest reason, could be one of the biggest reason, is your ability to put your roots down, right? UAE, KSA, I consider both of them as an expat country. There are a lot of immigrants here, but both of these places doesn't have a path to permanent residencies. Now that actually also pushes down some of the senior folks who want to come in, but they don't see what they're going to do after 10, 15 years, which is a usual time to build a business or get success into whatever they are starting. So, and then third point, I think, is cost of living is too high in both of these places. It's too high, which adds a lot of load and pressure on startups, especially to get the right talent into the region.
Yeah.
Right. So these are the things. It's hard comparatively.
Yeah. And how do you see the tech ecosystem in MENA then evolving over the next 3 to 5 years?
It has evolved, I think, in quite positively. Right. I have many examples where I was not even getting right resumes when I was hiring. Now, at least that's not the case. There are a lot of companies which have come up and been successful. A lot of new VCs, international VCs have come in. And so that has all allowed a lot of movement of talent into the region. So it's getting easier slowly. There is talent which is coming, but at the same time, competition is also quite high, right? It's getting to a level where every deserving candidate has at least 2 offers, right? Which was not the case 3 years ago. So in just span of 3 years, things have changed dramatically. And it will continue to change. Both UAE and KSA, they're attracting great talent to the region. And most of it, I would say, is because of the government efforts as well as the companies who are doing well, the success stories which are coming out of the region. That is also a big factor in attracting the right set of people here.
I think, when it comes to talent, we've had a bit of an imbalance in the marketplace a few years and has gone through different changes. Of 2021, it was super hard to hire top talent. Then we saw a bit of a downturn market, and what you said there, you weren't finding receiving the right resumes, but that was because a lot of talent was coming available, and that was kind of, to a certain extent, all you were seeing versus maybe some of the A players that aren't looking for a job. Then the rise in salaries, then the imbalance between people on high salaries and not wanting to bring their salaries down. And I think now we're going to see slight change again over the next sort of 18 months as well. So it'll be interesting to see.
Yeah, absolutely.
And as a co-founder and CTO, what advice do you have for the next generation and aspiring CTOs, and like, what does the CTO role mean to you, and like, how do you define success as a CTO as well? Because that's always hard.
This is hard. So it depends on, I believe, on the environment, situation, and company you are with. And the role has a different meaning and definition for each of these places. For example, if you are starting a company and a startup, CTO role basically is just a tech person who has a lot of knowledge breadth-wise and some deep expertise in some domains, which was basically my case. Over a period of time, things change. If you are in a bigger company joining an established company, that role is quite different. I think it is more strategically aligned, more decision-making and direction-driven kind of a role. So it depends. But for anyone who is coming to the region to start a company and to be in this kind of role or aspiring to be in this kind of role, there are a couple of things they have to be good at or should upskill themselves. One is people management. Because in this region, you deal with a lot of nationalities, a lot of cultures. So you really have to be adapting to all these new things coming down your way. Number two, you should be really good in building technology under limitations. Now, if we compare and contrast with US, it was quite easy, for example, in US. But here, for example, we don't have everything which is available from the infrastructure and technology point of view straight away to you. You have to many times leverage open source tooling instead of just going to some established tools or technology. So you should be very, very good in building infrastructure and technology systems for your company under limitations. That's one. And then finally, networking and connections really matters in this region. So that is another part which people have to pay attention to. And if you combine all these together, it's basically adapting to the requirement of the region and how things play out here.
Yeah. And when it comes to building high-performing teams, first of all, what's your approach? And second of all, what hiring mistakes have you made that you can give advice to others so they don't make them?
I don't want to spill my beans, but I've made a couple of mistakes. See, my hiring approach has changed over a period of time. When I was hiring our first founding engineers, I was looking for motivated people who are skilled in whatever they do. Back-end engineers, very skilled in back-end, front-end, technologies and things like that. As we grow over a period of time, that approach has changed. But the common factor or common denominator in both the approaches was motivation. Is the person really motivated to be part of this generational impact opportunity? Right? And I think that was the key to also compete with our competitors who were also hiring. And people who align with our vision and mission, who know that what they are trying to do, and can we provide them those opportunities? Do they understand those things? There were mistakes made by me where I miscalculated sometimes the impact a person would bring to the organization, just looking at their resume, talking to them for 1 or 2 hours before hiring them.
Does that mean you felt they were overqualified for what you needed?
They were overqualified for what I needed, and I paid more attention to their past experiences than what they could do immediately in a small organization like us, right? So that was something I have learned the hard way, but it's getting better.
Yeah, I mean, it happens a lot. Our conversation is all about managing those expectations of hiring for logos, but having that balance and everything you spoke about at the start, the purpose and mission alignment is key to every individual hire as well. It's not like a universal thing,
Absolutely.
I would say.
Absolutely.
What common mistakes do you see, like as an investor as well? What common mistakes do you see early stage founders make, and what you could give advice there? And that's not just on hiring, just in general.
Yeah. Okay. I think from my point of view, and I talk to a lot of founders as an angel investors. Almost every week I get 2 or 3 pitches to hear, and I'm connected to a big group of people. And this is my personal opinion that most of the founders who are building a tech business are not paying attention to building tech in-house. Most of them, because of cost savings, or there could be other reasons, but they tend to outsource. That's a mistake. If you are a tech company, especially tech company, any tech, could be an app, could be tech-driven something, some business, you must have a tech person on your side. Not necessarily just a co-founder or a CTO or whoever, but whoever you can trust and you see value. That's one of the biggest mistakes. And I can count on my fingers the examples where a good company with a good proposition, an idea failed because they didn't pay attention to this part. See, this part of the world is, I think, while talent is missing, and as we discussed previously, but requires a lot of innovation, requires people who can solve problems. And once you start outsourcing these things and do not control this from very beginning, you are basically leaving a lot of gaps in your platform, app, whatever you're building. And those mistakes will cost you dearly over a period of time. It happens. And I've seen it. So my biggest, I think, learning as well as advice to people is that don't make that mistake. Bring in somebody to help you with the tech side. Right? It should be in-house, not outsourced.
I'd be keen to understand what that cost disparity is, just because I've seen it loads of times as well, that in the early stages, and then they bring it all in-house. First of all, there's the cost of obviously hiring those people, and then usually those individuals come in and change the whole technology to scale as well, and that cost disparity between the start and what it in the future as well.
Yeah, cost is always remain a factor, but there are a lot of people who would happily work part-time for you while you are maturing your idea or raising money.
Yeah.
Right? There are a lot of fractional CTOs, there are a lot of VPs. The group is quite large. I mean, with Numi itself, I think you have more than 300 people, right, who can help in making certain decisions, right? So I think cost doesn't matter. And most of the times, these guys can also help you just on some other negotiations, equity or some role or advisor fees and whatnot. So I don't think cost should be a factor, because eventually, see, again, if you make, as I was saying earlier, if you make that mistake now, you will probably spend 3x or 4x the time when you were to rectify these mistakes.
Yeah.
So better not do it from the day zero.
And how do you balance the role as co-founder and CTO? I think obviously it works up to a certain point, but especially as you get to that point of scale as well. Like,
I think, the role evolves over a period of time. When you are building the company, you are playing both the roles. But as company grows, these responsibilities are delegated. For example, for me now, I have a lot of VPs and head of departments in place. So basically, my team can function without me. I'm not needed, sort of thing. But for strategic decisions, new innovations such as AI, which is coming, I can put my focus on these areas easily. Co-founder part again is hard, but as long as you have some sort of agreement between your rest of the co-founding team, I think it makes just life easier. Everyone knows what they are doing and what they are supposed to do, and everyone is helping each other.
Yeah.
But this is managing more than one role is always difficult. Always.
And there was a couple of bits that I unpicked that I wanted to ask you, because obviously you mentioned it gives you the time now to focus on innovation and strategy and AI. So I want to just come to that. But also picking your co-founders is very, very hard. Any advice there?
It is hard. Thankfully, I was not the one who was picking. It was Hisham and Aditya were picking. But it is hard. It is hard. See, co-founders are basically your partners, right? So it's like a marriage, right? And you have to be very careful who you are bringing in. But at the same time, if you are transparent and if you are very clear on the roles and responsibilities.
I was just going to say that's what I've learned. Roles, responsibility, accountability, and just having a team that complement one another.
Correct.
And that's very hard in our job because most of which are all sales guys.
I can see that,
So it makes it difficult. You don't necessarily just think, well, we can make money, we can do deals, but thinking about marketing, the commercial, the financial side as well is important.
Yeah. See, anyone, especially like any co-founder you bring in, they must have the same passion towards the mission and vision you have built.
Yeah.
Right? Because it's always an idea which comes to someone's mind, but you need a team to eventually implement and execute.
Yeah.
And you must be 100% sure that this person is completely aligned with what you're trying to do.
Yeah. I remember I was on a podcast, and the reason why we launched him was all around purpose, mission, vision. We wanted to change the industry. We wanted to be human-centric. We wanted people that genuinely wanted to raise the bar in recruitment. And I think I said something about that. As soon as someone in the interview says, like, is there fruit and snacks in the office? That's an instant no for me, or whatever. And there was a lot of controversy around it. But it is, purpose and mission is like, everyone says it. Like, these are the impact hires that believe in that.
Correct.
I want to be on that journey with you on the bus.
Correct.
So just going back to the bit you said around innovation, because I know you've been exploring a lot around AI, and there's lots to digest around it. But do you think when it comes to software developers, will they focus more on like systems thinking and architecture? And do you think coding will become less central in their work over the next decade? Like, what's your view there?
That's so interesting. Incidentally, just I think yesterday or day before yesterday, Mark Zuckerberg from Facebook, right? He said that they were going to stop hiring mid-level engineers. That was scary.
We had Stephen Kruger on the podcast, obviously ex-CTO of Cream, and his was all about the death of engineering. But he said like junior software engineers that will become obsolete, which is like what happens to all these people that are at like universities, and where do they go and what do they do? And it's just going to be about hiring basically staff and principal software engineers.
Right. So I was like, I had the same question. Like, anyone who's graduating between 2026 to 2030, what they're going to do?
Yeah.
Because nobody becomes a senior engineer just out of the college, right? So does that mean that a bigger change in education system is also coming? I don't have the answer today, but I can clearly see how AI is changing this side of thinking. And engineers definitely would be much more aligned and in spending more time in their critical thinking, system design, how to make machines work for them, not do the janitorial work like documentation and all those things. This will be all handed over, delegated. And in many cases, simple algorithmic or workflow design would be taken care of by bots or AI engines. So engineering is definitely going to change this year, you will see.
Great. Well, look, final thoughts, quick fire questions. What one piece of advice would you have for aspiring entrepreneurs?
Execute today.
If you could start over, what would you do differently in building Lean?
Hire in Dubai.
What one book would you recommend to the audience?
That's interesting. I'm reading too many books at this time. I would say it's very difficult for me. I like too many. And I'm more...
Pick one for a CTO and pick one for a founder.
Okay. For CTO, they must read Hard Things About Hard Things. That is, I think, one of the Bibles everyone should be reading. For founders, I think they should... I would not say book. I'd say they should see the podcasts from other founders. And I would not name one because there are a couple of good ones. But pick the founders you like and check their podcast. They're much better than, I'd say, books.
Awesome. Well, look, Ashu, thank you for joining Breaking Down Barriers. It's been a pleasure.
Thank you so much, Ricci, for this opportunity. Love the conversation and good luck for your rest of the podcast.
Thank you.